almost half of the total debt has to be refinanced. And doing so at a 4.5% interest rate is really not feasible. When you think about a strategic Bitcoin reserve as a tactical instrument to reduce the cost of capital, it becomes a very strong advantage to attracting residents, because otherwise, if the area has to pay a high cost of capital, of course that means fewer services and higher taxes.
Financial markets show promising signs of a rebound as the S&P 500 rallied 18% since April's lows. It now sits just 4.2% below February's all-time highs. Bitcoin is now also having a good month as it's holding well above $100,000 a coin. We'll be talking about what's next for not just Bitcoin, but risk assets in the markets overall, and the trend of adoption of Bitcoin on a nation-state level with our next guest, Andrew Hohns. He is a co-author of the BitBonds white paper, as well as the CEO of Newmarket Capital and the CEO of Battery Finance. And Andrew, I believe you're also a speaker of the BTC Las Vegas conference that's upcoming, May 27th to 29th. I'm excited to see you there. I'll be there covering the event as well. But anyway, welcome to the show for now. Thank you for being here.
Thank you. It'll be a pleasure to see you in Las Vegas, David. I appreciate being here as well.
Absolutely. Before we talk about the markets, what will you be presenting about in Las Vegas? I know we don't want to front run the actual speech itself, but what are some of the themes that you think will be important for the audience to understand in 2025?
At the Bitcoin conference in Las Vegas, the panel discussion is on BitBonds as American as apple pie. That's the topic title. And we're going to be speaking on Wednesday afternoon. I'm excited about that. I think that we'll be going into some of the details of the BitBonds proposal, which I think is a very sensible initiative for the US Treasury to adopt. Keep on looking at the 10-year, and it is stubbornly high. There's a very significant amount of bond refunding that has to take place throughout the remainder of this year, and for that matter, over the coming 2 years after that. Almost half of the total debt has to be refinanced. And doing so at a 4.5% interest rate is really not feasible. So, I think this is a very opportune time to pilot the BitBonds initiative and begin to get market feedback and essentially develop a new instrument for Treasury to have in its toolkit.
Mm-hmm. Yeah, I spoke to your colleague about BitBonds, your colleague Matthew Pines, a couple of days ago, last week actually, and so we'll revisit that topic later in this interview today. But let's talk about crypto adoption right now. The U.S. is experiencing crypto adoption encompassing 28% of adults, or 65 million people, according to recent data. The mass adoption is positioning the digital asset as a forefront for not just investors, but everyday people. I wonder how much of this expansion is due to just younger people or more younger people adopting this technology, or is it perhaps due to institutions and now the administration looking into it as well?
Well, I think that there's a combination of both for sure. I mean, my focus is on Bitcoin. I think the world is becoming a more digital place. Clearly, there's no doubt about that. And many forms of digital interaction will develop over the course of the next 5, 10, 15, 20 years. I mean, 20 years from now, if you graduate from college, your diploma will likely be on a blockchain issued by that university, and a future employer will be able to verify, did you graduate or not, just by looking at, the public record. They won't have to call the registrar's office. Or if you buy a house, the title insurance and the whole title deed definitely will be digitally delivered, as well as a million other things. But, even though you can take that long view, for where we are in the development right now as an investable asset class, I think that crypto, quote unquote, as a whole, I'm sure that some of the projects will succeed, but the only one around which I think that you can develop long-term conviction as a lender is Bitcoin. And it definitely has many attributes that make it very relevant in that regard.
The U.S. is creating a U.S. strategic reserve. New Hampshire recently created its own strategic reserve. Let me pull up my screen here and take a look at what's going on here. New Hampshire becomes the first state to approve crypto reserve law. They were signed into a bill recently. New Hampshire has become the first state. The state beat a number of others to the punch this year is what had started as a surge in state lawmaker momentum to run into roadblocks over recent weeks. It was the first to authorize the treasurer to set up a reserve. I wonder what these reserves are going to do to the price of Bitcoin, if anything, on a national level as well as a state level.
Well, I think that they'll increase the price of Bitcoin as you have more large institutional pools come in. There's only so much Bitcoin. I mean, we all know that. There's 21 million Bitcoin forever, and already 95% has been issued, and there's very little that has traded over the last 12 months. So, in order to build large enough positions, it's going to require a substantial amount of price discovery. And it makes sense that New Hampshire was the first, live free or die, and also a long history of Bitcoin adoption. Some of the earliest conferences a decade ago taking place in New Hampshire. But one thing that, I think is going to become more and more the case with these state level Bitcoin strategic reserves is how to integrate Bitcoin into the investment pools that the states already manage, such as pensions, university endowments, if they're state university systems, or permanent funds in the case of some of the state level sovereign wealth funds like in Wyoming or New Mexico or Alaska. And having a long only position in Bitcoin is very volatile. And it also begs the question, how long are you going to hold this long only position? And the answer, I guess, could be forever. But when you think about the investment decision-making reality of a lot of these entities, which meet on a quarterly basis, have a diverse set of stakeholders on their investment committee or on their board of directors, I think that Bitcoin's volatility may not match it so well. And so what I'm hoping for is that with all of the momentum of the Bitcoin state level initiatives, what we see is an integration of Bitcoin as a tool to reshape and improve the various asset class allocations that many of these large investors have developed over the years. How can Bitcoin improve credit? How can Bitcoin improve equities? How can Bitcoin improve private credit or private equities? Yes. And so on. And so you build up to a Bitcoin position by indirectly using its benefits across the asset allocation rather than just having a long only position without really thinking about, the duration or the timetable or the horizon that you'll hold it for.
I think some people may be wondering what ultimately is the purpose of the strategic reserve. The petroleum reserve makes sense during times of war, natural disasters. We have a stockpile of petroleum ready to be accessed should our access to petroleum be cut off. But what do we need a strategic reserve for Bitcoin for?
We're seeing at the corporate level that companies that have been able to amass a large amount of Bitcoin, in particular MicroStrategy, have been able to access financing and corporate capital markets with remarkable speed and very interesting terms. Building a strategic Bitcoin reserve at a state level or at the federal level, or for that matter, at the municipal level, has the potential to really improve the balance sheet of those public issuers and can dramatically reduce, for example, their cost of capital for all of the credit financing that they issue in order to build the local infrastructure or to repair and develop the schools or the sewer system or the water system or whatever the case may be, David. And so when you think about a strategic Bitcoin reserve as a tactical instrument to reduce the cost of capital, it becomes a very strong advantage to attracting residents, because otherwise, if the area has to pay a high cost of capital, of course, that means fewer services and higher taxes. And so you're able to really achieve much more of the strategic objectives that you have as a city, as a state, or for that matter, as a nation, by building up a financial reserve of this asset that's poised to appreciate so powerfully over the course of the coming years.
people can watch our interview with Matthew Pines. We talked about BitBonds, but maybe briefly explain the concept again and why we need BitBonds in today's macro environment.
Secretary Bessent and other members of the administration have very clearly articulated the objective of reducing the interest rate on the United States Treasury bonds, particularly the 10-year. It's not just important for the United States Treasury and its cost of finance, but it also plays a very critical role in the cost of mortgages, the cost of auto loans, and many other forms of credit. So bringing down the 10-year is important. It stands at 4.5%. We have a significant amount of refinancing that is coming due within the next year, and for that matter, within the next 3 years. Almost half of the total debt of the United States will be rolled over the course of the next 3 years. And if it were to be rolled at 4.5%, it would add a very substantial additional burden to the interest expense of the country. So the BitBonds proposal is a new way to think about US Treasuries. And the proposal in a nutshell is that the United States Treasury will issue BitBonds with a lower coupon than a bond that does not have a Bitcoin element. We've put forward 1% instead of 4.5%. So there would be 350 basis points of interest savings for the government every year. 10-year bond, that's 35% of the bond value. The proceeds, 10% of them purchase Bitcoin, and 90% of them go to normal government activities. At the end of the life of the bond, well, first of all, investors get repaid their par no matter what happens to the Bitcoin. The bond is secured to principal by the full faith and credit of the US government, just like a normal treasury. But they get 100% of the Bitcoin returns up to a total return of 4.5%, which is designed to equal the 10-year interest rate as it stands right now. And then anything above that is split 50-50 between the bondholder and the United States government, giving the United States government a cost-free way to build its strategic Bitcoin reserve in scale, while at the same time dramatically lowering the interest expense. The final piece of the proposal is that we recommend that these bonds be tax exempt as to income and also capital gains in order to give American families, American businesses, and other American taxpayers the opportunity to have a superior tool to save in the face of inflation, but also contribute to the restoration of financial well-being for the United States.
Andrew, how is this different conceptually from, let's say, issuing bonds with stable coins or any other fiat based on the blockchain?
Well, stable coins are not designed to appreciate. They're designed to mimic the value of the dollar. And as the dollar depreciates through inflation, which it's programmed to do due to the quantity of money increasing all the time, if you issue a digital bond, it might be easier to trade, it might be easier to send, it might be easier to audit or keep track of. And those are very valuable attributes. But the bond itself will still be subject to the peril of inflation.
Well, I think this leads to the ultimate and most fundamental question, which is why do you think Bitcoin will inflate against the dollar?
I think that Bitcoin will appreciate against the dollar because it is the scarcest asset in the world by far. There's only 21 million Bitcoin and already 95% of them exist. Gold, you look at gold, it grows in quantity between 1.5% to 2% per year based on new mining, which means that if I gave you an ounce of gold 35 years ago, David, and you pulled it out of your drawer today, it would still have an ounce of gold and it would have all of the same design and all the same features. It would shine just as much. But in terms of its purchasing power of the gold network, it would be reduced by 50% because the amount of gold around it has doubled over the course of the last 35 years. And silver is growing even more rapidly. When you have these hard assets, you have to think, okay, how much are they increasing by new production over time? And few things are truly finite. Bitcoin is finite. Honus Wagner baseball cards are finite, but they're not divisible. You can't just cut the corner off of a Honus Wagner baseball card and sell it for 10% of the value of the card, keep the other 90% of the value in the rest of the card. They're not fungible. Some of them may have a stain on them or a bent corner or whatever the case may be. They're not at all liquid. You have to organize an auction with all of the keyed in collectors. Bitcoin doesn't have any of those issues. It's liquid, fungible, weightless, divisible, accessible, universal, auditable on the blockchain, and finite. And so when you're just thinking about the best way to save value across time and space, I'm not familiar with anything that comes anywhere close to the value proposition that Bitcoin presents in that regard.
Are you ready to meet the biggest minds in Bitcoin and finance face to face? Introducing BTC Vegas, the ultimate Bitcoin event of 2025. Headline speakers this year you'll see in person include Vice President J.D. Vance, Senator Cynthia Lummis, AI and crypto star David Sachs, Hohns, the executive director of the President's Council of Advisors for Digital Assets, as well as industry titans including Michael Saylor, Lynn Alden, Ross Ulbricht, the Winklevoss twins, and more. Whether you're a hodler, builder, or just Bitcoin curious, BTC Vegas is where ideas ignite, partnerships form, and conviction grows. Tickets are going fast, and prices are going up, so lock in your spot today. Use my link below or scan the QR code here to get 10% discount before tickets get sold out. This summer, the crypto capital of the world isn't Silicon Valley or New York, it's in Vegas, so see you there. I think the fundamental value of Bitcoin as you outlined makes sense, but if you just take a look at my screen right now, Andrew, you can see the correlation between the Bitcoin and the general stock market. Here's the SPX. It's still quite strong. One could make the counter argument that if we have any sort of event that pushes down stock markets, despite these fundamental attributes of Bitcoin that you've outlined, we can still get, a decrease in value of Bitcoin, hence more volatile and less stable than the US dollar. How would you respond to that?
Well, Bitcoin is very stable if you measure it in Bitcoin terms. One Bitcoin equals one Bitcoin, whereas $1 does not equal $1 in the sense that the denominator of dollars is growing all of the time. So if you're measuring the Bitcoin in anything else, you'll see that over longer periods, the Bitcoin is dramatically outperforming. I mean, I'm sure you're aware that the price of a median home today is worth about 4.5 Bitcoin. 4 years ago, it was worth about 45 Bitcoin. And 8 years ago, it was worth over 400 Bitcoin. You're seeing that Bitcoin monetize over time. The correlations, that chart that you showed, it is very helpful in the short run to think about the correlations between different assets if you're articulating a trading strategy. But if you were to elongate that view, you'd see that the correlation breaks down. That was only a 6-month chart that you were showing. And when in doubt, zoom out. If you take a look at a longer term perspective on the Bitcoin, it is outperforming. It's outperforming everything. So it's a very interesting asset in that regard.
I wonder what has contributed to Bitcoin's outperformance, not just in absolute terms, but also if you measure it from a risk-adjusted return basis. So the Sharpe ratio actually is higher as well. And is that built in somehow, or is that just market perception of this particular asset? What has contributed, do you think, to the outperformance of Bitcoin versus every other asset in both nominal terms as well as risk-adjusted terms?
The primary use case for many, many people is a savings tool, a way to defend against inflation. And that's a use case that is important to virtually everyone on planet Earth. Every individual, every family, every company, every government, every entity is looking, how do they store capital across time and space in a way that it increases over time in purchasing power? That's a really good use case because you have a total addressable market of 8 billion people and however many companies and countries and everything else there are. But that's not Bitcoin's only value proposition. Bitcoin is extremely versatile. And if you look at, for example, the way that Bitcoin's being used in Texas to balance the grid at ERCOT with their large flexible load program, or other energy applications such as Nodal and Vespine recapturing landfill emissions and monetizing them into Bitcoin, or orphan oil well and natural gas well emissions being recaptured and monetized, or companies like Gridless that are doing similar things in Africa with run-of-river hydro and electrifying villages. And it's not just energy either. It's also payments and remittances, cybersecurity, cyber domes, SATS streaming. All of these different use cases for Bitcoin are versatile uses that underpin its value and create demand for it, but they are not directly store of value use cases, but they build up the users of Bitcoin in an extremely interesting way. And then the last thing to realize, of course, and this is the most important thing, is that as long as we're going to measure Bitcoin in dollars or Bitcoin in euros or Bitcoin in yen, or for that matter, gold in dollars or euros or yen, your measurement, your denominator, you have to be aware you're measuring the thing in something that has no upward boundary. I mean, the amount of dollars, euros, yen, sterling, yuan that are being printed every single year is very, very, very high. Uh, I was actually reading last night
Yeah.
chapter 9 of Money Mischief by Milton Friedman, which is a great book. And he has chapter 9, I think it's chapter 9, or was it 8, The Causes and Cure of Inflation. And he makes the very good point that central bankers all over the world, everyone is talking to them about whether they're going to control interest rates and bring the interest rates down and do this and do that. But that's actually not within their control. They're only focused on the short end of the curve. And even there, the market can dislocate relative to what the central bank can do, let alone the long end of the curve. But the one thing that they actually do control, which is the quantity of money, no one is talking about regulating that. And that's really the name of the game. So inflation is pernicious. It's an ongoing erosion. It's an invisible tax, and if you want to protect your capital and your purchasing power, it makes all of the sense in the world to think about how do you store it into something that is finite, but then beyond just finite, divisible, fungible, weightless, useful, all these versatile use cases.
Is it fair to assume then that Bitcoin will never become a medium of exchange universally? It's going to be a store of value for people. Wouldn't governments want some sort of currency that they can print ad infinitum because of whatever policies they want to implement?
Yeah, my base case is that Bitcoin is unlikely to emerge as a medium of exchange, at least for the foreseeable future. And that's for a couple of different reasons. First, you have Gresham's law, which is that people hoard good money and they spend their bad money. In a bimetal standard, people hoard gold and spend silver. In a gold standard, people hoard gold and they spend the dollars, the paper. It's always the case. And this has been the case for a long time. And Bitcoin is very, very good money. So people will hoard it rather than use it. But then there are also policy reasons, which are extremely important. And those vary from place to place. And what I'm referring to predominantly are tax policy. If you have to recognize a capital gain transaction or a capital loss every time you use Bitcoin to buy or sell something, it becomes extremely burdensome to do that, and it's totally impractical. I do believe that the United States, or for that matter, any country, but especially the United States, because I'm interested in seeing the United States prosper, would benefit greatly from removing capital gains tax treatment from Bitcoin completely and unshackling this asset to circulate around the country and really provide its benefits in a much more direct way to many, many, many different uses and increase the velocity of the Bitcoin. But, even with that change, David, I do think that it's very likely that governments will continue to create fiat and issue fiat for reasons that are related to the strategic objectives of different governments, but they won't necessarily be able to depreciate the currencies ad infinitum. There is a check, and that check is governed to a certain extent by the Bitcoin and the ease with which the Bitcoin can travel around the world.
How do you think financial institutions, traditional financial institutions, I'm talking about the JP Morgans and the Bank of Americas of the world, how will they adapt to this ongoing growth of crypto adoption, both on an individual, retail, institutional level, as well as the nation state level?
Well, I'm sure there will be a range of different, retail elements, and maybe wealth advisors will try to help to assist people in sorting through this environment and the way that you interact with your bank for bill payment or for obtaining a loan, mortgage financing, or something like that. All of that, I'm sure, will evolve as digital assets grow and become, more generally useful. But in terms of the DNA of these institutions, like if you take a bank, what's so interesting about a bank is that its capital exists in yesterday's dollars. In other words, they've already issued stock and they get some retained earnings. And that forms the base of their capital ratio. And that governs the amount of loans that the bank can make because the regulators say, okay, you have to have a certain percentage of your risk weighted assets held as capital in reserve. That's your stock, your capitalization ratio as a bank. And to the extent that the loan balances start to increase in nominal terms due to inflation over short intervals, in order to compete, the banks will find that they will need to extend larger nominal loans to their customers because the assets are worth more and more, which will put a significant amount of pressure on them to raise additional equity capital in order to maintain the ratio because their equity is not growing with inflation. It was issued in yesterday's dollars. So in a very direct sense, these institutions would benefit greatly from holding some of their capitalization at the bank level in Bitcoin. And, to a lesser extent, they would benefit if they were to do this in gold. That's now contemplated to a certain degree under the new Basel rules, but Bitcoin especially. So I think that we'll see quite a lot of evolution. We've already seen Intesa begin to purchase a little bit of Bitcoin. Italy's largest bank made that announcement a few months ago. It's the first bank that I'm familiar with that's made such an announcement as that. But I think that as regulators become more open to appreciate the benefits that can be derived from Bitcoin, rather than thinking of it as a threat to their structure, they think of it as a tool to extend and develop the capabilities that they're interested in. You'll see more and more banks adding it to their own reserves.
Especially if regulations are changing to allow more flexibility for banks to start holding crypto. I wonder, though, some people are worried about the decentralization aspect, which is one of the core tenets of Bitcoin. If the nation as a whole starts adopting Bitcoin, either more on an institutional level or in strategic reserves, would that not be the antithesis of decentralization?
The the thing about Bitcoin is that you can't prohibit anyone from using it. It's open to everybody on the same exact terms. Whether you have a huge amount of Bitcoin or a small amount of Bitcoin, you interact with the network in the same way. Everyone is empowered to run a node, and everyone can set up, their own wallet and engage with the network. And in that sense, it's very egalitarian. Even if somebody has a lot of Bitcoin, they don't actually have the ability to change the rules or to modify the underlying structure. Maybe they could move the market, but if they were to do that, that would also be, potentially counter to their own interests. So the incentive design of the system is very, very strong. I do agree that the story of Bitcoin continues to evolve. And maybe some people who felt that the currency was going to be always counterculture might be disappointed by some of the corporate embrace of the asset class or some of the government interest in the asset class. But I take a little bit of a different view, which is that people don't really change Bitcoin so much as Bitcoin changes people. And as it lowers the time preference of individuals who are involved and does its work through its incentive system, if those incentives can spread into corporations, small businesses, state governments, local governments, or for that matter, the federal government, of the United States or other countries, then I think that we all stand to benefit from a much more rational orientation uh, to life.
How did you first start getting involved in Bitcoin? At what point in your career did you look at this technology and say, I can get behind this?
I had been following Bitcoin for some years, but at my prior firm, it wasn't feasible to buy digital assets for compliance reasons. And when we started Newmarket 5 or 6 years ago, that was also around the same time that I really became refocused on the question of inflation and began to dust off some old books from my shelf, like an analysis and history of inflation by Don
Hmm.
Parlberg, which is a great book, and Money Mischief, which I already mentioned.
Hmm.
And with the liquidity supernova that exploded over the world, not just in the United States, but the Reserve Bank of Canada quintupled its balance sheet over that same exact period of time, and many other institutions grew enormously as well. I became convinced that inflation would be the primary threat to investors over the course of the ensuing 10 to 15 years. And so began really thinking about how can investors defend against inflation. And that's particularly important, David, I'll mention, for credit investors, because if you're making income, which everybody needs, but you only get back at the end of it your principal, if on a real basis that's greatly diminished, then you've absorbed all of this risk and you maybe aren't even staying even. So inflation is an extremely important topic, and that's really what led me to focus on it professionally, focus on Bitcoin professionally.
And finally, which, if any, policy changes are you looking forward to this year?
I think that the implementation of the strategic Bitcoin reserve is such a sensible initiative that I urge 100 United States senators to co-sponsor this legislation. It's not a partisan issue. This should not be thought of as a Republican issue or a Democrat issue or an independent issue or any other party issue. It should be thought of as a rational, sensible American issue because establishing that as an appreciating asset on the balance sheet, and you could do it directly through purchases, you could do it indirectly through programs like BitBonds, of which I'm particularly interested in the sense that I think that it's quite an elegant solution. Uh, it stands to benefit those who adopt it so well, and with the degree of indebtedness in terms of the debt to GDP levels of so many governments. The United States is high, but it's nowhere near the highest, and this would work for others too. It's not realistic, I think, David, to pay off the debt, so to speak. But what can be realistic is to improve the balance sheet to the point where the assets on the balance sheet of the government appreciate more rapidly than the liabilities increase. And that can right size many institutions.
There have been several other ideas of re-anchoring the dollar system back into some sort of commodity-backed system. I've spoken to a number of economists. Judy Shelton, for example, is an advocate of the gold return to the gold standard. Would a return to something like that, except for Bitcoin, work? In other words, a Bitcoin standard?
I think that it is definitely the direction that we're traveling in. I mean, I'm familiar with Judy Shelton's proposal and with her work and her role also at the European Bank for Reconstruction and Development. And I think that she's a really sharp cookie. So, yeah.
Thank you very much, Andrew. Appreciate your insights. Where can we follow you and your work?
Well, you can reach out. We're very interested in engaging with folks that are trying to figure out how to finance real world assets and incorporating Bitcoin into the financing of those assets. And we would be happy to hear from you. You can check us out at newmarketcapital.com, and there are email click-throughs, and feel free to send a note.
Okay. Thank you very much, Andrew. We'll put the links down below, so make sure to check it out there. And we'll speak again soon. I'll see you in Vegas.
Thank you, David. Grateful for the opportunity.
Grateful for you to be on the show, and thank you for watching. Don't forget to like and subscribe.